Hello and welcome to another update video about the DXY. Yeah, the DXY is a little bit in no man's land at the moment. And let me explain. So we're obviously still looking here for a possible ABC structure to the upside to create a larger B wave. I mean, yeah, exactly. A larger B wave, ideally hitting sort of the $110 level. Yeah, maybe a little bit higher, maybe a tiny bit lower. But that's sort of what we're looking for. So it should eventually continue to go up, the DXY, in the short term. But in the very short term, it could very well come down into this support area first and then move up. So we're going to talk about which levels you need to watch out for, because we're a little bit in no man's land at the moment, just moving sideways. If we break below a certain level, then one of these scenarios will become my primary. Until then, I'm looking at the one that I'm going to introduce to you now. I think we talked about both of these in either the previous or one of the previous videos. So let's first start with actually the count that I've got on the chart, which is only really going to become my primary, to be honest, based on the latest price action if we drop below the previous low, and it's quite likely we're going to do that. So if we drop below that $104.10 level here, yeah, if we drop below this level, then I think we are pretty much in this count. It would just lead to an extension of the C wave. So, or maybe even a double, it might even be a WXY, depending on, because this one looks very much like a 3-wave move down. Well, okay, the C wave could become an ending diagonal, so that's fine as well. What I mean is we currently looks like we completed 5 waves up in this rally of the February lows, yeah. And then we came down in an A wave, overshooting B wave, and we could now come down in a C wave. This could, I mean, this doesn't need to come down that low, to be honest. I would say here for this, if this works out, because of the height of the B wave, we might actually only get to the 38.2 fib level, which is at 103.20. Just looking at the length and to compare it, right? Then again, if you look at this as a wave 1, this maybe as a wave 2 to the upside of the C wave, then we can also estimate targets. So let's just, it would sort of look like that, yeah. If it's a diagonal pattern though, which it would have to be because the wave 1 here looks like a 3-wave move, then yeah, best would be we take here the length of the A wave, we go to the high of the B wave, and then we've got a couple of targets here. I mean, one very likely target in an expanded flat, which this would be, is the 1.618 extension. So there's certainly going to be support already at 103.83. I wouldn't even rule out that we come down to that level only. Yeah, it is what it is, because the B wave did overshoot quite a bit. So if we break below $104 and 104.09, then we could drop in the first instance to 103.83. If we drop below that level, I'd be looking at 103.46. That's the 200% extension. Below that level, we've got 103.20. And below that level, 102.87. To be honest, because of that, I'm going to deactivate here the 78.6 and 61.8 fib levels, because if we come down to that level, it's most likely, if we go below 102.75, it's most likely going to be another count. So in all likelihood, we should not come down lower than 102.75, which is here the 50% fib level, because then the assumption must be wrong. It would otherwise be a very, very long C wave. I mean, I would be surprised. Don't see that at the moment, okay? But yeah, below 104.09, I would be looking at further downside, possibly all the way down to 102.75. Yeah, maybe not even that low. But at the moment, because it adds up a little bit better, I'd actually be looking at a slightly different count. That is my primary, as long as we're holding above this dotted line there, 104.09, yeah. I think we talked about this count before, and it would just be a slightly different one. It would allow for a little bit more upside before we eventually come down. So we would basically do this entire move to the upside in this B wave without any strong retracements. And we might even not go up that much, right? in this scenario, and I'm pretty sure we talked about that before, I would move the A wave here. I would move the B wave down here. So A wave was then on the 7th of Feb at around $104. The B wave down here on the 14th of Feb at 102.58. And we'd now be moving up in a C wave, so that we already are in this yellow C wave, yeah. And in this C wave, we could be forming a diagonal pattern. And we could say that the move up here was a wave 1. So let me just show you wave 1 to the upside. We could now be coming down in a wave 2. Yeah. Then could rally in a third wave. That would most likely be a bit shorter than the wave 1, because wave 1 looks extended. Then a 4 and a 5. So I have something like an ending diagonal in the C wave. Possibly targeting sort of the $106, $107 level. Yeah. Again, this I think is in control as long as we hold above 104.09, but I think probabilities are fairly close together. I think this is the key pivot point, the key decision point, the key signal level we need to be watching. And yeah, you know, that's what we need to focus on, because at the moment we're a bit in no man's land. We are coming down here a little bit, but we haven't broken support, but we've come down a little bit too much really to hold this support. So it's all a bit, yeah, a bit uncertain. So it's all about that 104.09 level, yeah. And if we move up and break above the 105.37 level, then I think we have further clarity and confirmation that we already are in this C wave. So it's really about this level. I mean, if we break below it, I could imagine the cryptos and some other assets are going to turn to the upside. However, if we go up directly, also in my opinion, the downside potential for these other assets, which have at least temporarily a negative or inverse relationship with the DXY correlation, yeah, that would also be limited, because it's not, you know, this count would not suggest too much more upside either. You know, I mean, we talk about what, like 2.5%, 3% maybe, okay. So, and the move of the February lows, that was already 4%, yeah, to where we are now, it's 3%, but in to the peak, it was 4.5%. Okay, that's best I can tell at the moment about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.